please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Let's now turn our eyes back to results. One of the numbers that came on the weekend, Nifty company, was Indiabulls Housing Finance, and it was a very robust growth in loans of 34.3%. Gagan Banga, Vice Chairman and Managing Director of Indiabulls Housing, joins us now. Good morning, Gagan. Thanks much. Well, can you take us through the quarter that went by? 34 is a mind-boggling pace of growth. Is this maintainable? How does FY19 look?
Yes, good morning, Lata. So we've been guiding for profit growth of between 20 and 25% and loan book growth of around 30%. The last 2 years, we've been managing to grow the book between 30 and 35%. And that's largely because affordability in the housing space from a consumer point of view has been steadily improving. Prices of homes have been flattish. Interest rates have been down, and ever since the subsidy program kicked in, it's been meaningfully cheaper for someone to buy a house as against live in a house. Specifically from Indiabulls Housing point of view, all of our digital initiatives are essentially helping us build a lot of number of loan kind of growth. So that's the whole focus area of the company. It took us about 10 years to get to 1 million customers, and it should take us just about 2.5 years to get the next 1 million customers. And that's largely because of the digital initiatives that we've taken, which have allowed us to engage with relatively smaller borrowers without impacting our cost income. Okay. The other important piece is that the competitive landscape is extremely benign. And a large part of the banking system is caught in its own issues. So between competition, digital and affordability, I think we have a pretty good headroom to grow, and fiscal 19 should be no different. So profit should be compounding at between 20 and 25%, and book should be growing at between 30 and 35%.
Okay. Gagan, good morning. Good numbers from your stable, of course, as always. On a slightly lighter note, there was this WhatsApp video, right? I mean, where you had, an Indiabulls employee quite aggressive, and that was an interesting campaign. You shot it down. What was wrong with that campaign? It was generating quite a bit of, mojo on Twitter and WhatsApp. It looked quite interesting.
Yeah, it's a good thing to know that employees are excited and they're pushing what they're supposed to be doing. So what we've been doing, just to give you a background, is that we've been setting up these kiosks essentially because after the CLSS scheme, the PMAY scheme, it is very, very attractive for the salaried guy to be taking a home loan, and we're trying to do a reach out program to them rather than just wait at either the construction site or in our offices. As part of that, one of our employees choose to be rather adventurous. We strongly believe as a company that home buying is amongst the most significant, if not the most important investment decision most families in India make, and there has to be a certain level of discretion as a lender that we need to exercise. Both we have to focus on servicing them, but we also have to respect that decision, which is why management chose to come down heavy. And while we appreciate the excitement, discretion has to be exercised as well.
How much of your loan book comes from the CLSS affordable housing category, the ones that were subsidized?
Yeah, so about 80% of the loans that we would be doing by number would be qualifying for the subsidy scheme. The subsidy scheme has been massively expanded. It covers now income profiles as high as 18 lakh of rupees. Our average borrower's income profile is about 10 lakh of rupees. And
qualifying,
which is why,
Gagan,
what one has been steadily...
Not qualifying. Sorry. How many actually got? Because what we got from the NHB and NHB and Sudhin Choksey gave us a very different impression that they are not getting the money in time from the subsidy, and therefore not many loans have gotten cleared by the for subsidy. Eligibility is one thing. How many got it actually?
Okay, I'm sorry. I think that after the initial teething period, which lasted about till about November, since then the subsidy disbursal has stabilized. Obviously, both at our end as well as the National Housing Bank end, they have to exercise due caution. It is money being put into people's accounts, so the necessary paperwork is checked 2 to 3 times over. But from a logistics point of view or from a money availability point of view, there is no concern. I was rather happy to see that towards the second week of March, there was actually a meeting held with senior officials at the ministry to figure out if there was any problems. And towards the end of March, massive monies were disbursed. So
any of yours?
I don't think there is any.
What percentage of your loans?
There is any issue. About 40% of my borrowers would have gotten the money.
Okay, that number that we were talking about, we did that whole analysis on Friday as well. Gagan, just hold on. TCS has hit $100 billion in market cap. It listed in 2004, if you have those graphics once again, it listed at about $10 billion market cap. Ooh. According to those rupee rates, 47,000 crores of market cap is where it listed at. And since then, considerably gaining size and gaining market share, and of course now market cap of $100 billion. The point here about TCS, the market cap journey is coming up, of course, on that one. If you compare it, that's of course the 2004 listed at 47,000 crores, immediately went to 1 lakh crores in 2006, then 2 lakh crores was also quite early. After that, a bit of a hiccup, but after that, 2013 was where it hit 3 lakh crores. Then, of course, the next 1 lakh crores was rather easy, 4 lakh crores. Then IT sector went through a bear market, but TCS somehow managed to do well. And from 5 lakh crores to 6 lakh crores, it took time. But from 6 lakh crores to, of course, now 6.6 lakh crores. And just a comparison between TCS and Infosys, it listed at 25% discount to Infosys. And now this is not to say anything uncharitable about Infosys, which actually has been a far more value generator or wealth generator than TCS, because TCS straight away listed at 47,000 crores. Infosys listed at, say, less than 1,000 crores. But it listed at 25% discount. Now it's 2.5 times Infosys, and it's got market cap which is higher than all other index IT companies put together.
Oh yes, and it's I think bigger
massive achievement. Yeah. Absolutely,
it's bigger than Accenture also now, which was the biggest so far. So TCS has crossed Accenture in terms of market cap as well. And I was just reading a report about the kind of growth that TCS has seen since its listing. Compounded annual growth for TCS, if you had invested in it, was 22% since 2004, while the IT index has given you a compounded annual growth of about 14%. That's the kind of outperformance.
And on a massive base. Yes, it listed as a huge company and went on to give 22% CAGR even after that very big base. So that's a pleasant sight to see. Now 6.63 lakh crore and counting. That's the TCS market cap in rupee terms, and over $100 billion in dollar terms. I think that one is not needed. Yeah. It's 100 billion. We have splurged a bit on commas. It's a $100 billion market cap for TCS. Gagan, okay, a pleasant distraction while speaking with you. We were waiting for that number to hit 6.61 lakh crore, and that's what it hit. So a very celebratory moment for the Indian stock markets as well. But to come back to you, I mean, the reason why I asked you is there is always a fear in investors and regulators' mind when something grows too fast. And 34 would qualify that way, 34% loan growth. As well, just last week, the Reserve Bank Deputy Governor in charge of banks and NBFCs, N.S. Vishwanathan, actually cautioned banks that, this herd mentality of going retail is not a good idea. So, I mean, I just want to know, would you worry that, this is too fast growth, and then you had your employee being overexcited and you had to pull back? Would you worry about loan quality because of the speed of growth?
So if we look at how the entire housing market has evolved, the regulator has been extremely vigilant. There are very tight loan to value caps. There are some of the other guidance notes coming on valuation. There is adequate equity which is there. Housing prices in India have been flattish. So my sense is, as long as there is a granularity and that kind of rigor in the book where the whole focus is on trying to build granularity, loss given default historically has been 2 to 3 basis points. With the kind of equity built in, the kind of equated monthly installment structuring which is done in India, where a part of the principal keeps coming back every month and thus the equity keeps building up over the 20%. My sense is the core housing portfolio will continue to perform well. And as a company, we also have a philosophy that while there is growth, we have to invest in counter-cyclical provisions. So we are carrying about 80 basis points of excess provisions off the balance sheet just to make sure that if tomorrow there is any kind of a blip, we are still being able to deliver consistent results for stakeholders. So between our provisioning policies and the granularity of the book, one is reasonable, comfortable that the last 10 years that we've done, now it's been close to about 40 quarters where we have been compounding at this pace our earnings at between 20 and 25%. I'm quite hopeful that we should be able to do it at least for the next 2 to 3 years.
Okay, Gagan, we'll leave it at that. Thank you so much for joining us. But really the talking point right now is TCS and the way it's been moving up.